We're halfway through the year and the market data is out. I got your market report coming up next. Hey, what's going on, friends? Here we go with the Big Island market report, and we're going to look at some year-to-date numbers and compare how this year has been so far versus year-to-date last year. But we'll start with, as we normally do, the overall breakdown of where we're at. So far, right now, there are 1,834 active listings. We're going to come back to this, but we keep going to this number, right? This is the number of active properties on the market, which is historically very, very low and lower than it was last year. So this is what's continuing to drive market activity and prices staying stable and almost continuing to rise this month, is that there just is a lack of inventory. And normally that number is pre-COVID years was above 3,000, 3,500 was where that number used to be. So still a very, very low number of properties, and that has not been changing. If we look at the monthly comparison, so this past month's data versus the month prior and then the year prior, looking at median sales price, we're at 515 median sales price. It was 495 last month, and then it was 475 this month last year. So median sales price for residential homes is up this year over last year. So no fall off on prices in the residential market. And then if we look at the condo market, we are a little bit down. 600 is the median sales price. It was 612 a year ago, but we were above. It was 550 last month. So same, about stable. We're seeing that kind of median price fluctuate, but no significant drop off, and pretty much on par with where we were a year ago. And then if we jump into the year-to-date numbers, so this is what we wanted to focus on here this month, because we're halfway through the year. But as we've been talking about, big slowdown, right? We had 1,500 sales year-to-date last year in 2022, and we're at 986 sales this year-to-date. So there's a lot less activity this year than there was last year, but that is not affecting home prices. And like I said in the beginning, with the number of homes that are on the market, that's why, is because we have less inventory than we did last year. So that's continuing to constrain inventory, and the buyers are holding up the demand, and it's continuing to be strong. So if we look at market activity month to month and compare it, this is the chart that I like to look at. This is dollar volume, but if we scroll down to the number of sales, this is telling us how many sales happen on the island every month. And as we saw last month, I was showing that rise back up. And if you look at 488 sales last month, that is more than there were a year ago. So after the slowdown began in the middle of last year, and the number of sales started falling, and it continued to fall and hit all the way down to 288 in January of this year. It's been continuing to rise. So we're back up to, this is a historically normal number, around that 450 to 500 mark. That gets us 5,000 sales at the end of the year. And that's normally around how many sales happened pre-COVID. We were up well beyond that, up to like the 7,000 range for the year in the COVID years. But now that we're kind of out of this high interest rate shock market and the number of sales falling, it's been climbing back up. We had a little dip back in March, but then in May and June, we are back to kind of normal levels of sales per month. And again, this is in a very low inventory environment. So the number of sales, if it's going to be sustaining in an environment where there's a lot less listings than there used to be, that's going to continue to drive prices. And all experts are saying that they're expecting the latter half of this year for price appreciation to be in the 0.5% per month kind of range, where we did see in the first half of this year a little bit of price depreciation across the board. Not so much in our market, but across the board in the US, there was a little bit of price depreciation in the real estate market, and now they're expecting that to continue to rise and go back in the positive direction. So that's the quick rundown of what the market's doing on the Big Island. The short story is that if you are in a position to buy now and you need to buy, I would recommend that you do, because a big thing that's going to affect this, if you think interest rates are going to go down in the future, if interest rates fall 0.5%, a percentage point in the latter part of this year, inventory is not going to recover, and then more buyers will flood into the market, and you will be in a competitive situation. It'll be harder to buy then than it is now. So it's actually probably going to be easier to buy now, just because there are less buyers in the market. It's still strong, but there's less buyers in the market. And so you may be better off buying at the higher interest rate, because you could overall pay less if the homes continue to appreciate a year from now. If we see 5 or 6% appreciation, and you got to pay $50,000 or $60,000 more for that house, the cost savings of paying the higher interest rate or the lower interest rate at that time may be offset by just paying a lower purchase price now at a higher interest rate. And as always, you can always just refinance in the future if you lock in the sales price of a home now. So if you have any questions about this or any other specific market data in your area, you can always put it in the comments below or direct message me, or you can always email me at dylan@buybigisland.com, and we'll get back to you. Thanks for watching. See you guys next month. Aloha.